Hello there, Betty. Glad you could join me for a discussion on one of the most heartwarming taxes in America. Of course, I'm talking about the death tax, or estate tax, depending on which side of the issue you're on. If you're unaware of the details of this tax, please visit my previous video entitled The Death Tax, Part 1, The Basics. That will give you an overview of the death tax as well as a little information on the inheritance tax, the gift tax, and the capital gains tax, all of which tie into the topic a little bit. Incidentally, the terms death tax and estate tax are interchangeable, but estate tax is the proper legal term. I've previously used the term death tax because it's much more fun to say, but I'm going to use estate tax from here on out to be fair to both sides. So the question is, should we have an estate tax or should we abolish it? Here are the arguments for both sides. Pro-estate tax. There are 5 main arguments people use when defending the estate tax. 1, it takes money from rich people who don't need it and gives it to poor people and middle-class people who need the money, and it helps close the gap between wealthy people and poor people. Obviously, this is because the rich people then have less money, and the poor people, in theory, have more money. 2, they say it helps capitalism and boosts the economy by making rich kids work instead of living off of large inheritances all their life and never working. In other words, they don't want this happening.
Little Pierpont?
Yes, Mummy?
Come into the upper quarters so your father and I might briefly converse with you.
All right, Mummy. I shall come at once.
Splendid. Your father and I want you to know that we shall leave our estate unto you, that you might never wilt in the open fields or labour by the sweat of thy brow.
Oh, thank you, Mummy and Daddy. Never shall these blessed hands wield the fetid axe.
Oh, we wouldn't think of it. Long live the Wentworth family forever and ever and ever, amen.
3, they say it keeps rich families from just passing all their wealth down to their heirs and just staying rich without ever paying taxes on their wealth. The concern is that large estates would just continually pass wealth from generation to generation without being taxed, thus allowing a family to stay rich forever on the same estate. They say the estate tax will help prevent this. 4, they note that tens of billions of dollars in revenue are raised for the government. Obviously, taxing millions of dollars at 35% will add up pretty fast. And finally, they say that the estate tax covers the appreciation of assets over the years that haven't been taxed via the capital gains tax. In other words, if a millionaire purchased a castle in 1980 for $5 million and then died in 2011 with his castle now being worth $9 million, then that means the castle appreciated $4 million and the millionaire never paid capital gains taxes on the $4 million increase while he was alive. Therefore, the 35% estate tax would catch him at the back door to compensate for that. So those are the most common defenses of the estate tax consolidated into 5 easy points. The estate tax taxes the rich and gives to the poor. It forces rich kids to work, prevents large amounts of money from being transferred from generation to generation tax-free, provides billions of dollars in revenue for the government, and makes up for the unpaid capital gains taxes during the lifetime of the deceased. Next, we'll address the criticisms of the estate tax. Some say the estate tax taxes wealth that has already been taxed, but the pro-estate tax side replies the estate tax does not tax people's wealth, it taxes the transfer of the wealth. Some say the estate tax creates a large and sudden tax bill that grieving heirs often aren't able to pay if the heirs inherit property rather than money. Family farmers and others often inherit property, but not money. So the result is the family gets stuck with a 35% tax bill, but they don't actually have cash to pay for it, just a lot of property. As of yet, the IRS does not accept tractors or wheat bushels as payment, so heirs must liquidate the family assets to pay the tax. However, the pro-estate tax side claims that most family farmers and small business owners are exempt from the estate tax, so it's a moot issue. Moreover, the Reform Act of 1976 increased the time span that heirs have to pay the estate tax, so the burden isn't as bad anymore because it's spread over a longer period of time. Lastly, the pro-estate tax side also notes that the estate tax doesn't affect poor and middle-class families. Only people with estates valued at over $5 million for singles or $10 million for couples. Okay, now on to the other side. The people opposing the estate tax usually give 7 basic reasons. One, it discourages people from saving and investing and encourages them to downsize and withdraw investments as they near retirement, especially when their net worth is approaching the exemption amount of the estate tax. They say this hurts the economy for everyone because the economy thrives when everyone is investing and growing. Two, they say it forces the offspring of farmers and ranchers to sell the family land, buildings, or equipment to keep their operation going. What happens here, like I mentioned earlier, is that a farmer will die and then leave the family farm to his kids, but the value of the estate is tied up in the land and all of the tractors, barns, equipment, and whatever else. So even though the heirs have, in theory, inherited millions of dollars in wealth, the wealth is all tied up in the property. So the heirs will sometimes be stuck selling off parts of the family farm to pay the 6 or 7 figure estate tax. 3, it punishes people for working hard and saving money to leave to their heirs. They ask, why should a family be penalized for working hard, sacrificing, and saving so that they can leave something for their family? 4, it encourages people to move abroad toward the end of their lives to other countries where the estate tax is much lower, if they even have one at all. 5, they claim that the estate tax constitutes double taxation. They say this because you go to work and earn money, but when you get your paycheck, income taxes and payroll taxes are withheld. Then when you take that money to buy your house and the rest of your estate, you have to pay sales taxes, and then property taxes for the rest of your life. Then when you die and leave your estate to your heirs, there's the estate tax and possibly an inheritance tax if you live in a state that has an inheritance tax as well. So they say by the time the estate tax comes along, that money has already been taxed multiple times. 6, they say that the estate tax is essentially the redistribution of wealth because it is essentially the government taking money from rich people and then sprinkling it upon the masses. Wow, thanks, rich people. Finally, opponents of the estate tax point to Alicia H. Munell, a former Federal Reserve economist who estimated that the federal estate tax system generates $1 in compliance costs for every $1 it raises in revenue, making it the nation's most inefficient revenue source. All right, responses to criticism. Where the proponents of the estate tax say that the estate tax makes up for unpaid capital gains taxes during the lifetime of the deceased, the anti-estate tax side replies that the estate tax doesn't account for all the inflation that worked against the value of the estate. To those who say that the heirs of a large estate don't deserve the wealth because they didn't work for it, they say that the case could be made that if the heirs didn't work for the estate and don't deserve it, then neither does anyone else. It should be the right of the deceased person to dispose of his or her wealth as he or she sees fit. When supporters of the estate tax say that it only taxes excess wealth, the anti-estate tax crowd responds, who gets to define excess? They say it is socialist to suggest that the government should decide when someone has enough wealth. All right, because I usually do, I'm going to share my opinion on this matter. The truth is, I find it difficult to come down hard on either side. The problem with the estate tax, as I see it, is that it actually is double, triple, quadruple taxing, or whatever you want to call it. As the anti-estate tax side explains, you go to work, and then the government dings you with a payroll tax. Then dings you with a federal income tax. And then depending on the state you live in, you may get dinged with a state income tax. Then you take the leftovers of your money and purchase the elements of your state, and you pay sales taxes on everything. As your estate increases in value, you pay more and more on property taxes. Then certain elements of your estate that you cash out in your lifetime will be hit with a capital gains tax. Then when you finally die, the federal government swoops in for one last farewell bash and issues the estate tax. And then again, depending on what state you live in, the state may also charge a separate estate tax or an inheritance tax. It just seems a little much, you know? The pro-estate tax side will say, as I mentioned earlier, that it's not double taxing because it's not a tax on the wealth, it's just a tax on the transfer of the wealth. Oh, well then, what a relief. That little change in wording really saves the day, doesn't it? They also continually remind us that the estate tax only affects $5 million or $10 million estates, depending on whether you're married or not. And this is just code for, it taxes the rich, yay! But for me, it's a matter of principle, not whether a person can afford to pay a ridiculous tax. However, the part of the estate tax that I can understand, conceptually at least, is the fact that the estate of the dead person often has not been subjected to the capital gains tax. So for instance, you and I both have houses worth $100,000, and both of our houses went up in value by $30,000 since we purchased them. If you sell your house today, you have to pay capital gains taxes on the $30,000 increase in value. But if I die and leave my house to my heirs tax-free, then the gains from my house never get taxed. So it's kind of unfair in that way. The estate tax makes up for this with a 35% tax. which is similar to what would have been paid in capital gains taxes. So as long as we have a capital gains tax, it's at least consistent to have the estate tax, I guess. But the question then is, should we have a capital gains tax? And that's a different issue altogether. I still don't particularly like the idea of the estate tax, especially where people inherit property but not money and have to sell their parents' property to pay taxes, but I at least understand the rationale. It just still strikes me as odd that the government would take a 35% chunk out of your estate just because you died and left it to your heirs. And plus, the point about the estate tax not accounting for inflation is a good point, I think. You do lose a lot of your value in inflation. Now, as I said, I wouldn't come down hard on one side or the other, but I definitely lean against the estate tax. Or
the death tax.
Sorry, I just couldn't resist. Thank you for listening. From time to time, I will be producing other clips on matters of politics, economics, current events, and worthless garbage. I like to discuss worthless garbage. Please subscribe if you have an interest in the babbling to come. Have a good day, and look both ways before crossing the street. You don't want to stumble upon
the death tax.